I think that streak might come to a close, here in October or August and September. We're looking at a pretty weak seasonal period. There seems to be a lot of ducks lining up in a row saying, hey, this market top might be looking a little toppy, and we might be wanting to take some chips off the table. It's absolutely stunning how little volatility the market's really seen, and every now and then we'll have a down day, but now we have bad down days of 1%, which really are not that bad. And so I think when you look at it in historical context, you have to say this has been an absolutely amazing bull run. We're up almost 100% off of the lows of March 24th lows back in 2020. And you have to kind of step back and take that and look at it and pause and say, if you compare this bull market to bull markets in the past, so 2009, 2002, start of the 1950s, start of the 1980s, this bull market has well outpaced the first 16 months of any other bull market. So if you look at that in context as well, we're getting a little nervous that we might actually see one of those rare corrections that actually occur, which is very normal to have happen.
Yeah, wouldn't it be healthy, Victoria? Listen, we want stocks to go up. You got bills to pay, kids to send to college, but you don't want to have these volatile moments where all of a sudden you're down 15% in a matter of days and people start to lose trust in the stock market. I mean, a healthy correction now and then is not a bad thing.
Yeah, I mean, I look at it like a tea kettle letting off steam. It's good to let off some pressure because at some point, if this builds and builds and builds and earnings, which have been phenomenal, can't keep up, and then you're looking at overvaluation and concerns on this market overheating, I think you definitely want to see some of this healthy correction here, which typically occurs at this point in the season. August and September is usually a bit rocky. And so I think we'd like to see that, because if not, I'm a little worried we're the Price is Right guy just climbing up the mountain. And at some point, that mountain's going to hurt.
Yeah. Yeah, especially because if you got the wrong price, that yodeler, we all remember what happened. Yodel, best game ever, by the way, and he goes over the edge. Very quickly, IBM, you've recommended in the past on this very program. You still like IBM?
Absolutely. It's got a 4.6 dividend, a 15 PE. It's 100% a turnaround story. There's spin-ons on track for the end of the year, the spin-off, and they still generate $10 billion in free cash flow. It's an amazing stock. It's very ignored in the tech sector because it's kind of a boring play. But don't forget, they're getting more into the hybrid cloud. They're a leader in AI with Watson. And you have to look at this and say it's a great place to maybe play defense if everything else in the sector is very expensive and you're looking for something more reasonable and we think things might get a little bit rougher. I think this is a great stock to bunker in because, one, I do believe in its growth prospects, 100% believe in this turnaround story, but it's also very reasonably priced and generates massive cash flow, and companies are still going to be paying for IT infrastructure and infrastructure spending they need to have.
Got to squeeze another pick out of you. Got about 30 seconds, Victoria. Another name you like, please?
I like Chevron. I know oil and gas is looking a little dicey, but I think they're very well positioned. Again, it's a great dividend. And for a growth stock, we really can't beat CrowdStrike still. I think obviously everybody's nervous about ransomware these days. I think companies are going to be putting a lot behind improving cybersecurity, and we see them as our top pick in a really great space. So, I think it's going to have some sharp drawdowns. It's a smaller stock, but as an overall growth, their cloud-based and AI-based company is really a leader in where the market needs to go.